The beauty of Fundera compared to other financing options is that we really can become that one-stop shop for your business, finding the correct financial solution based on your situation, with all of this being free to the business owners, in addition to not impacting your credit score during the exploration process. We know that's top of mind for all business owners. Lastly, aside from financing options, we also have a public blog offering tips and insights to maintain and grow your business, given your specific need. Now, jumping into the different types of financing options that we do have, we have offerings ranging from SBA and bank loans down to lines of credit, business credit cards, as well as invoice factoring. Now, what is the difference between each of the individual products? Which one is better than the next? Why do we offer so many products? And which avenues can a business owner go? Those are all completely valid questions. There are a number of different things that can come into play. However, the most important thing as a business owner that you should consider is what you're using the funds for. Whether you're using it for recurring inventory or a remodel of your location, those are two entirely separate use cases, which can lead you down two different product paths. What we can do now is dive into the different product paths to give you guys some context as to what product might be best for your need. Let's start with some everyday needs, whether it be cash flow gaps that you are waiting for some payments to come in, whether it's payroll that occurs multiple times throughout the year and you need some extra funds by the end of the week, or potentially in some slower seasons. Some other needs that might occur are inventory purchases. Typically, some businesses that come into Fundera, they're looking to purchase some inventory. They're doing that multiple times throughout the year and flipping that inventory for that revenue. What happens when you purchase inventory every single month, every 2 months, every 3 months? You need access to capital consistently throughout the duration of the year. Now, lastly, something that many business owners don't think of, and honestly, why would you? I understand no one really wants to think of the worst case scenario, but emergency funds or rainy day funds is something that every single business owner in America has. As scary as it is, we don't want to come to the reality of it. Life happens, whether it's a hurricane, a family emergency, and so on. You never know when you might need a quick infusion of cash. These are all prime examples that someone should have access to a line of credit at any given time. And at Fundera, we always recommend every individual business owner has that access to a line of credit. Now, the question might be, why is a line of credit the best product for these scenarios and not something else? The reason being is that it costs little to absolutely nothing to have access to a line of credit. It is meant to be there in the background for when you need access to the funds. Additionally, you can draw as much as you want from the line of credit up to your approval amount. Now, for some context and an example, if you're using it to purchase some inventory and you need $20,000, but your maximum approval is $100,000, you can only draw the $20,000 if you need. Once you purchase your inventory, flip this for revenue, you can pay down the line of credit and only pay interest on the $20,000 that you drew versus the full $100,000. And you're only paying interest for however long you have that outstanding. You'll have access to this line of credit in perpetuity, which makes this the best product for these specific type of use cases. Now, on to different types of use cases, some general working capital, whether it's hiring new employees, some marketing campaigns, equipment purchases, or simply refinancing some debt that you had previously. While you can continue to use your line of credit if you think this is a recurring need throughout the year, which a marketing campaign or hiring employees can fall into that bucket, or if this is simply a one-time expense per year and comes up few and far between, a term loan is a much better product for this use case. The question becomes, why is that? The reason being is that generally speaking, term loans are a much cheaper product for a business. They're cheaper because you receive a lump sum of cash deposited into your bank account and have a set scheduled payment over the course of a certain period of time, whether this is a 1-year term, a 3-year term, a 5-year term, and so on. With these loans, the lenders, whether they be banks or alternative lenders, know exactly when your payments are scheduled. Therefore, they can calculate that into their underwriting model versus a line of credit you can draw whenever you would like. So inherently, it increases the risk slightly for lenders, making the term loan a much cheaper product. Moving on to a little bit of the unicorn of financing in the small business space, long-term loans and SBA or bank loans. Of course, this is what every business owner dreams of. And honestly, why not? They're going to be the best products in the market. You can use these loans for various reasons, whether it's expansion capital to remodel a new location, hiring employees, large equipment purchases, or one-time large purchases. Now, why am I emphasizing large? The reason being is that because these loans usually take a bit more work to get through the process. As you get qualified, the terms are going to get better. They can stretch out to 10 years and get as low as 7 or 8% on the rate. Now, in order to qualify for loans like this, while I know this is a dream for many, it does come with a bit of parameters, but it's not as out of reach as many people may think. There are some key things to think about when you're thinking about this type of loan. At a high level, we're looking at a minimum of 2 years in business, a strong credit score in the high 600s or 700s and above. In addition to that, looking for multiple years of profitability on your tax return. Now, of course, there are many other factors that come into play, but that gives you a general baseline of what these type of lenders are looking for. The biggest sticking point when looking at those general parameters that's most confusing to business owners is the profitability portion. What a bank constitutes as being quote unquote profitable is what is legally on your tax return documents. Now, I completely understand that you might be sitting there thinking, my accountant told me to write off certain expenses to show a loss or a low profit so you can pay less in taxes. I totally get it. I would do the same. Who wouldn't? Taxes are brutal. However, unfortunately, it's a double-edged sword with the banks and longer-term lenders as they do require that profit on the tax return. It's relatively black and white with them. So our general advice at Fundera to business owners, if you're looking for the best terms on your loan, keep your credit high, show the biggest profit you can, even if it's against your accountant's will. If you're in the market for financing, there are just a few things that you should consider prior to exploring. As we discussed, there's various routes that you can go with your products. So you ensure that you have all the right answers and make sure you thought about all the avenues you want to go. It's key to consider a few separate things. What is the general profile of your business? Meaning, how long have you been in business? What is your ownership breakdown? Is it a 50-50 split or do you own the whole thing? What state are you registered in, etc.? How much capital are you looking for? In what time frame are you looking to get funded? Why are you looking for that much capital and what are you looking to use the funds for? This is the most important question that you should consider what you are using the funds for. Some business owners, to be frank, do not like to divulge that information to our loan specialists. We're a little bit vague. At Fundera, we make sure to dive into that question the most. The reason being is that business owners should not think of this as an invasion of your space. We're asking these questions because it allows us to provide you the best recommendation possible given the myriad of different products that we have on the platform. Without us knowing what you're looking to use the funds for, how can we help the business? How can a senior loan specialist help advise you in the right direction? Word of advice, if you're on a call or speaking with somebody regarding financing and they're not asking you these questions, that should be your red flag as a business owner. You want to make sure the product is fitting exactly into your needs, and this is exactly how it allows us to do that. Now, preparing for an application. This is sometimes the daunting part, but it's really not that bad. What documents am I going to need to gather for this individual process? The simple answer, recent bank statements and a possible business tax return. The longer answer, it depends what product we're going to explore. Some require just 3 to 4 statements. Others require 10, 20 different documents. Again, not trying to beat a dead horse, but it comes down to the use of the funds. One thing to be wary, though, of a business owner. If someone gives you quotes over the phone without looking at any type of documentation, whether it's bank statements or tax returns, there is no chance they are speaking with any type of certainty. And personally, I wouldn't trust much of what they say. There are many things that come into play with your financials, whether it's bank statements, the number of deposits, low ending balances, etc. With tax returns, it's the ownership breakdown and profitability. If someone refuses to give you a quote without looking at your financials, rather than getting upset at them because you didn't get an answer, this is actually somebody you should be running towards. They understand it's impossible to do so without looking at anything. Now, lastly, I want to give you all an understanding of the timeline and what it typically takes to complete this process. The perception of many business owners is that it takes a couple of months to complete. And frankly, you're not wrong if you're talking to your local bank. However, at Fundera, we pride ourselves in the speed that we have the ability to fund all of our products in a much shorter time frame. Now, to be fair, depending on what product, the time frame will vary. The process can take as little as 12 to 24 hours, or it can last a few weeks or a month. If we're going for the more sophisticated products like a bank or an SBA loan, they typically take anywhere from 3 to 6 weeks, versus at a bank, it can take a couple of months. So we have the ability to speed that process up. However, if we're looking for something with less documentation and a quicker turnaround, there are fantastic products that we offer from 1 to 5 years that can fund within a day to a week. Thanks for listening, everybody. For more information on financing and everything else you need to run your business, please check out fundera.com/blog. Also, be sure to subscribe to our YouTube channel for more videos.